Google did a massive bond offering. Part of that, it was multi-currency. It was US dollar, British pound. I think it was also Swiss franc. I don't think the euro was involved. But this goes to the AI build out, right? We all know, everybody's heard the stories the last 3 years. AI is just going to consume a massive amount of dollar capital. You're talking about trillions of dollars in equity and credit financing to just keep this build out going. This week, Alphabet launched a deal in the U.S. I'll get into that a multi-tenor deal in the U.S. dollar investment grade capital markets. They followed that up early in the week in British pound markets, and I think the notable here was the GBP markets were willing to issue Google a 100-year bond. These are not all that rare, but they generally tend to, like, 100-year or long duration issuance tends to, or interest in them tends to spike as interest rates are topping out or on their way down. Growth concerns come into play. We talked about this in the Gordon Pepper framework a little bit last fall. We'll keep citing that, in our week-to-week commentary. But basically, like, once you're past that point of peak of the boom, if you will, commodity prices and inputs into production tend to rise in price. Growth slows out as kind of the marginal bidder at these kind of, just think of everything as an auction for those inputs, starts to just taper off. And interest rates tend to fall as that growth is in decline. So what you see from savers is just a willingness to extend further and further out on credit and duration to maintain their nominal incomes. And so part of this process, as you're getting late cycle, is you tend to see more and more long duration bonds picking up as short-term interest rates and money markets really just continue to decline towards their lows. So the other side of this that I found extremely interesting, if you think about, okay, you can see this in the US 30-year Treasury markets. Yields have been falling pretty precipitously these last since February, right? We started at 4.9, 4.93, 4.92, something like that. And they've just been in decline all month. You've got long-term interest rates falling almost 20 basis points in a matter of, a little over a week. I would argue that's very similar, two slides ahead, Cameron, to what you're seeing, this deflationary scare hitting the SaaS software sector, the often doom posted charts you'll see on the IGV, iShares, software cloud computing ETF. This disruptive worry that, hey, wait, AI, while enhancing productivity, this is actually going to be deflationary. So what you're seeing now is this market, which through volatility, pockets like we're in. I can say it. AI, how the market's going to react, how human society is, going to integrate these technologies, what it means for our future. All of that is kind of up in the air. We're just going to have to see how it plays out. This week, we're especially, or recent weeks, the deflationary worry has really, in my opinion, taken hold. So remember 2023, 2024, if you throw an AI headline out there, it was bullish. Like, you just mentioned AI in your press release as a stock, you're like, that's a buy, like, just bid,
Looking into whether AI
lift
is
the
helpful for
offers.
us. Yeah.
Yeah. Now, since the beginning of 2026, especially, you throw AI out there, you put AI in a headline next to a stock's name, you'd be like, sell. Now it's
Right.
become, it's literally flipped from euphoria and AI towards what we just call it, like, panic. Oh no, this means my business is destroyed. So it's just this kind of massive state of confusion. But if you're thinking about an interesting bet to make, right? What is your bet on, if you buy 100-year duration, very like almost all the time in history, we can go back in examples here, but rarely ever has it ever worked, especially on a fiat, managed ledger with like nothing redeemable for that monetary unit to lend money on 100-year time frame on, the coupon on that Google bond is about 6 and 1/8, I think.
Yeah.
Is that investment going to keep up in its real purchasing power terms? Odds are highly against you. But if you're betting on this deflationary panic, as we've been in the last few weeks, then you start to see um, just the demand for long duration, corporate debt, tied to this AI trend, which that's what the capital proceeds are going to be used for. Data center build out. Google's going to, continue developing its Gemini uh, models and so on. But in the US, you did not see demand in the US dollar system for 100-year bonds, but they did get a lot of 20, 30, and 40-year demand. It was roughly of the $20 billion deal, it was probably about a third, right? And it was very well subscribed. So you saw it covered anywhere from 5.7x oversubscribed on the 20-year tranche to on the low end, 4.5 subscribed on or covered on the 30-year, which was the largest chunk at $4 billion, and then 5.5 covered on the 40-year tenor. So still a lot of demand in the US dollar, but I think there's not that same panic over growth that you saw in, maybe a slower growing economy like the British pound represents.